So I want to talk a little bit about what's going on in the stock market right now. It's kind of a little crazy, as you've probably heard. Social media has certainly been buzzing about it. Wall Street, people are just going off. Robinhood supposedly stopped some trades, and I think there's a little bit to talk about there. So at this point, you're probably wondering, why should I trust you? Well, first, I'm not trying to sell you anything, and I've spent my whole life in business, primarily real estate. I have a real estate license, and I majored in business management, and I've been kind of entrepreneurial my whole life. So through that, I think I've gained a very good financial education that kind of makes me qualified to talk a little bit about this. Without further ado, what's going on here? Are we in a bubble? Is the stock market in a bubble? I kind of tend to think so. In fact, a lot of experts seem to agree. Every day there seems to be more videos about, are we in a bubble? You've got stocks like Tesla, GameStop, and other companies trading at what can only be categorized as absurd price to earnings ratios. Let's just be honest about that. I mean, come on, Tesla, look at that. It's not normal. And you've got companies that are filing bankruptcy and then their stocks soar. Remember Hertz? Just look at the indexes, all right? The PE of the S&P 500. It's, soaring at all-time highs comparable to times like the Great Depression. So obviously there's really something going on here with the stock market. And what is it? Like, it seems like we're in a bubble. It really does, and everybody's investing. Everybody seems to now be a stock market expert. And look at the last few months. Everybody seems to be winning, except obviously now the Wall Street big shorts, particularly on Tesla and GameStop. Gotta chuckle a little bit at that. So in any market bubble, there are 5 stages that you're looking for. Displacement, all right? Displacement, it's kind of like any, call it paradigm shift. And in this case, I think that displacement is likely related to the pandemic. Then you go from displacement to boom, all right? You've got a market boom. Think about that stock market, right? Went through the pandemic and dipped, but we had this amazing V-shaped recovery. Pretty awesome. But it absolutely did not reflect the economy whatsoever. The state of the economy was much worse. The most job loss we've seen since the Great Depression, right? You can't deny that. Huge job loss. There you have it. Prices rising, right? You got the boom and prices going up. And throughout the whole pandemic, the market continued to do pretty well. Yeah, it'd have a couple of off days here and there, but it was, just kind of moseying along there. But then you get into the third stage, euphoria. Wow. Well, what's euphoria? Euphoria is when asset prices skyrocket. They just take off, all right? And we've been seeing that happen quite a bit more frequently. Everybody's, let's take this to the moon, right? It's rocketing up. And this has become more evident with Tesla, and now more recently even than Tesla, GameStop. What's happened with GameStop is just crazy, right? There's no rhyme or reason really to it. Like, it doesn't make sense, okay? It was a few months ago, it was a $3.95 stock, I know, because that's where I bought it at. So it's just ridiculous. And if, in case you're wondering, no, I certainly didn't hold it this long. So no, I didn't make thousands of percent. Do I regret selling it at $13 a share? No, absolutely not, because I thought it was overvalued there, and so I sold it. The next stage you have is profit taking. Yes, profit taking. All right. And now are we starting to kind of verge into that section where investors are starting to be like, okay, things have gotten really crazy. There's a lot of money here on the table. Let's start to pull some of those chips off. I think we could potentially be there. So we could see a lot more profit taking, in which case there's going to be some more dips and more people are going to start becoming the bag holders, which I think a lot of people already actually are. It just doesn't get talked about as much. After profit taking, we go into the final stage of a bubble, and that's panic. All right? People have profit taken, the shares have started to dip, interest in these shares has kind of slowed. Not so many people out there wanting to buy them. And now investors are panicking. They want to sell these shares. Unfortunately, they're not going to get what they put into the shares, right? So maybe they bought GameStop at like $400. Well, now they're maybe getting $350 or $300. But as those guys are selling those shares, that's going to continue to happen. And people are going to be like, oh my gosh, I'm losing all this money. I've got to get out now to preserve my losses so that I don't lose more. And then you get into a scenario where investors are selling, and they are selling at any price. That's the crash, right? Rock bottom. And we could end up seeing this fairly soon, right? Stock market, all-time highs, kind of doesn't have much where else to go, right? I mean, it's been going up, right? Now it's kind of time to see those people take those profits, and then those people that are still in it, when they're losing money and they're the bag holders, they're going to be saying, okay, I need to cut my losses, and people are going to be cutting their losses at any price. In fact, the Harvard College Consulting Group just came out with a really interesting piece, okay? It's about consumer finance, and they specifically were studying Gen Z. They came to a few conclusions. One of them is that consumer finance and fintech is poised to present the largest disruptions in the finance industry over the next decade. And to go further into that, they actually identified 3 main drivers of this shift. It's characterized by high socialization. So you've got all these people talking about finance, getting on Zoom, talking about their stocks, thinking they're stock trading experts, and who knows, maybe some of them are. But as we're about to find out, I think a lot of them really don't know anything about the market and could really spend some time learning about indicators and, what these things mean. The next driver that they identified was the growth of market familiarity driven by celebrity stocks and market hype. Let me run that by you one more time. Celebrity stocks and market hype. That's kind of turned into the stock market now, right? People are trading off of hype. Not financial indicators, not the financial success of the company, not the earnings per share, but the hype. And the last driver they identified is this: quarantine-fueled search for entertainment and novelty. The stock market has become some people's version of entertainment and novelty. Not a way to better yourself, not a way to find companies that are worth investing in. And along with this, they've noticed a continuing trend, all right? The balance of investment accounts are shifting towards individuals and individual accounts rather than the old professional trading platforms where, you've got somebody managing it for you or a computer does it or whatever, all right? People are taking personal control over their own investments, which in theory is a good thing, right? To a certain respect. Along with this, we've seen a rise in zero commission trading platforms, which has also driven these numbers way up, higher than ever before, because it's now cheaper than ever to trade stocks, right? No longer are you paying a commission on every trade, or whether it's a fixed amount or a percentage amount, right? It doesn't really happen anymore. They have all changed their models away from this commission model, and in fact, a lot more companies now have shifted, and they're now making most of their money based off of interest on the shares that they loan. Let's kind of delve a little deeper. As I continued to read this, they started talking about the studies and the people they talked to and the motivation behind their investments, right? Now, and I just want to remind you guys, we're talking about Gen Z here, all right? I'm not talking about your grandma and your grandpa, or, you if you're 50. The investment motivations for these people, of the people they surveyed, 31% want to make quick cash. Quick cash, that's what they're after. 30% are doing it purely for the entertainment, or, maybe not purely, but, let's be honest, if they put for the entertainment, they're not, investigating these stocks and thinking about, is this a really good quality investment that I should be putting my money into? And then another 41% said intellectual curiosity, which I suppose in a way I could understand, right? I mean, you're curious about the stock market, you hear about all these people doing it, you want to try it, right? You're curious. But what I found the most interesting number to be was that only 26% were motivated by retirement. I mean, maybe they just think Social Security is going to take care of them down the road, which probably won't, but most of them aren't motivated by retirement, right? So not sure really what they're thinking, right? Now there are some other numbers in there saying that maybe it's long-term savings, but man, how are you going to build long-term savings if you're just willy-nilly trading for entertainment and to make quick cash? They also concluded young people are making their choices of financial products based off of peer pressure and social popularity. When I think about that, I'm thinking Wall Street bets, to be honest. I mean, that's what comes to my mind. As soon as I read that, I'm like, yeah, 3 million users, Wall Street bets. If you go look through Wall Street bets, they actually view it as gambling, right? They talk about it like it's gambling. I mean, hell yeah, GameStop, right? Let's put it all on green 00. That makes so much sense. And yeah, some people are going to get really rich doing that, right? Because somebody inevitably will be right, but a lot more are going to be wrong and a lot more are going to lose money. And from Q1 of 2019 to Q2 of 2020, there was a 106% increase in users on retail trading platforms. 106% increase. And guess what? As you go further into it, the most popular community that these people are a part of and trading off of, you guessed it, Reddit's Wall Street Bets. And a whopping 58% of these traders surveyed have generated no revenue. No revenue. So 58% are losers, is what this says, right? Few people are right? But the majority lose. And the majority of the 42% that are coming out ahead aren't winning big. You'll have a few of those, of course, that are winning big, and you'll read about that in the New York Times or in the Wall Street Journal, right? It'll be this trading success story built on the backs of these 58% of people that lost money. And of course, as is natural, the least successful investors were those that didn't have a trading strategy. Imagine that. Not being successful because you didn't have a trading strategy, right? Yeah, let me just go randomly pick stocks and throw a Hail Mary and hope I win some money. It just doesn't work that way. You know, somebody might make money, but it's purely luck. And I think that's what a lot of this is. It's purely based on luck. And people hoping, right? They've got this short-term mindset that they want to get rich quick, right? They want to get rich now. And, well, most of them don't. And as they continue investigating all this, 65% of the people that they asked that didn't generate revenue cited making cash quick as a reason for investing. So there you have it. 65% that didn't make any money wanted to get rich quick. So there you go. Short-term mindsets don't work. It's right there. And then to go further, obviously Robinhood is at the center of a few disputes right now. Maybe it should be, maybe it shouldn't be. They've done some kind of shady stuff, and if they do end up getting investigated, it wouldn't be the first time they've been investigated and wouldn't be the first time they've been found of wrongdoing. Robinhood investors are found to have the lowest success rate among investing platforms. There you have it. I don't want to call Robinhood investors dumb, but I mean, they're not making a good case. Do you think we have a bubble? I kind of think we have a bubble. Some of that information would tell me we have a bubble. And I want to emphasize, I actually don't really think that Robinhood investors are dumb. I think that we live in a system that, I don't want to say purposely doesn't teach you about finance, but doesn't make it very easy for people to learn about this stuff. You have to really actively go out of your way to learn it. And so in that respect, I think that people have been a little bit duped, and obviously there's shady stuff that goes on in Wall Street, right? They don't want you to win, right? Because if all you guys are winning, the odds are they're probably winning less, right? But at the end of the day, the devil's in the details, and there appears to be a bubble, and I think it's coming to a head here soon. And unfortunately, the result of all of this is going to be a few people make a lot of money. They're going to win big, but there's going to be lots of people left over holding the bag. Normal, everyday people holding that bag. That's not a good thing. I don't think any of us want that. But that's what's happening, right? Everybody's jumping into these stocks, and at some point it's at the expense of everybody that has gone in after them, that they've said, yeah, get in on this. Let's go. Let's to the moon, right? And then, oop, I'm dipping out. Good luck. And then they lose money. So in a sense, I think that's a little bit disingenuous, and maybe you might disagree. Maybe you think that somehow everybody's going to come out okay, smelling like roses, we're all going to make money, and I would love for that to be the case, but unfortunately, money isn't created from nowhere, right? It has to be taken from somewhere, and I don't think Wall Street's going to let all the money be taken from them. So with everything going on, I mean, especially with GameStop and where it's at, obviously pretty crazy. Think it points to a bubble. I've now said bubble probably like 100 times, but I think it's true. But did what happened with Robinhood and GameStop, was there collusion with Wall Street there? Was there a crime committed there? I don't know. It's a little shady, right? Oh, we're gonna hold off on all of you guys on our trading platform buying, but we're still gonna allow you to sell. And by the way, the rest of the big players on Wall Street, they can still do whatever they want, but not you guys. Nope. That's a little odd, a little unfair, probably actually a lot unfair. And there probably will be an investigation to that extent to see what happened and if there was wrongdoing. There's already all kinds of talk about it on the media. And from Republicans and Democrats alike that think this stinks. And it kind of does stink. I don't want you guys to think that it's all doom and gloom from here. The stock market's going to go down. Everybody's going to lose. It's just shit for a long time. You know, what am I going to do? I guess I'll just sit on my hands and my money. I don't think that's the case. I mean, I do think that the stock market is going to go way down, and I think it's going to be suppressed. But I don't think it's going to be every asset class in the stock market, and I don't think it's going to be every stock. I think there will still be nuggets of gold to find. You're just going to have to look harder. And in the future, I plan to talk a little bit about that. I want to tell you guys about my personal investments, how I'm managing my risk with an eye on the future and the long term. Because let's be honest, short-term thinking doesn't work. I just read a report that confirmed that. I knew it myself. I've been a long-term thinker for a long time because when you think in the short term, it doesn't work. You become too short-sighted. You don't see too far ahead of you enough to know where things are going and where you should be investing. So that's why I really don't think short-term investing is a good play, and that's what a lot of people are doing here. We want to avoid that short-term make money quick mindset. It's not successful. But with that said, I hope you guys have learned a little bit about this. I'm actually going to provide a link to the report in the description below because I think you guys should read it. All right, I didn't even touch on half of the report, to be honest, because there was a lot in there, and it touched on a lot of different aspects of finance, and these are all things that are going to be factors moving forward. These are going to turn into long-term trends, and I think it's important that people read that and understand it and also apply their own critical thinking to it, because maybe not all of it's right? Maybe they missed something, but maybe they didn't. Maybe it's all right, so read it. Take a look at it. Really do a deep dive. And with that said, I'm here because I want to hopefully provide value to you guys. So give it a like if you liked it, but comment down below. Tell me what your thoughts are. Did you agree? Did you disagree? What do you want me to talk about next? Or what do you want to talk about, right? Because it's not just about me, it's about you guys, and I want you guys to find value in this. Let me know what your thoughts are, and I'll do my best to read all of them, comment, and hopefully address some of those comments in a future video.